It's time for people to understand that we are at the later stages of this monetary system, and these lower rates will benefit the top 1% as asset prices will remain inflated. Who's bringing all of that gold in, and much of it leaving the exchanges? Well, those are the insiders who are closest to the information. So the insiders are buying commodities and selling equities, and the mom-pop public is nowhere near commodities and all in on equities. And this is why the rich get richer and the poor get poorer, because the rich not only have the most money, they're closest to the
You're watching Silver News Daily. Subscribe for more.
This is the moment where everything converges. Vaults are being emptied, premiums are rising, industrial users are scrambling, Eastern nations are draining supply, and behind it all, a coordinated plan to eviscerate the US dollar is unfolding right before our eyes. The Comex wasn't built for this kind of pressure. The fiat system wasn't built to survive this kind of distrust. And silver, silent, overlooked silver, is being quietly positioned to explode. When you add it all up, the pieces fit too perfectly to ignore. A mystery buyer removes millions of ounces from circulation. Paper silver loses credibility. The dollar's destruction is no longer a fringe theory. It's a strategy being executed in real time. At some point, the dam will break. It could be a banking panic, a geopolitical flashpoint, or simply a realization that there isn't enough silver left to meet demand. And when that happens, price discovery will no longer be governed by charts and algorithms. It will be driven by panic, by scarcity, and by the brutal math of supply and demand. Will silver hit $1,000? No one knows the exact number. But what we do know is this: the mechanisms that kept silver suppressed for decades are falling apart. And the forces pushing it higher, monetary chaos, industrial necessity, and sovereign accumulation, are stronger than ever before. That's not speculation. That's inevitability. So if you've made it this far, now's the time to stay informed. Hit that subscribe button and join the conversation, because what's coming for silver will rewrite everything. And remember, this is not financial advice. Always speak to a qualified professional before making any investment decisions.
It's creating imbalances or misallocations between resource and capital. And this is the problem that we've seen over and over and over and over again, and that is not letting the market control the rate of interest and the cost of money, but thinking the bankers know best. They're late, and even doing it now at all, to me, is the wrong thing. This is the problem. We're boxed in, and they feel that they need to do this. But in essence, all we're going to do is distort things even worse. The rich are going to get richer as asset prices are going to go much higher. The economy is already slow. So for people who have already lost their job, or the lower income folks, are going to see much higher asset prices, or much higher prices in just the necessities that they need. So the wealthy get wealthier because they own assets, and the poor who don't own assets will find it harder to put food on the table, to drive to work. You're just going to see an uptick in inflation and an economy that is shedding jobs. The Bureau of Labor Statistics, the BLS, should just be called what it is: bullshit, BS. And the numbers that come out of there, whether it be unemployment or whether it be inflation, have misled the public for a very, very long time. And the numbers that they're telling us on inflation are actually much, much higher. You know this, your dad knows this. We've talked about John Williams and Shadow Stats. He's been on your show, and he would tell us inflation's actually closer to 11%, not the 2.5%, almost 3%. The producer price index shot up last month, and again portraying higher and higher inflation. And really, this is going to light a fuse, if you will, under the costs of living expenses for the average American person. It's not going to do much to help the average American. What it will do is it'll benefit the upper 1% who have lots in the way of asset price.
And just when you think the pressure couldn't mount any higher, the industrial sector steps in and throws gasoline on the fire. Silver isn't just a monetary metal, it's an industrial workhorse. And right now, demand from solar panels, electric vehicles, 5G infrastructure, and advanced electronics is surging like never before. In July 2025 alone, over 10 million ounces were delivered on Comex, driven not by investors, but by manufacturers scrambling to secure physical metal. Why? Because they know what's coming. Supply chains are tightening, inventory buffers are shrinking, and delays are already starting to show up in real-world production. Solar energy in particular is eating silver alive. Photovoltaic demand is at record highs, with governments pushing aggressive green energy mandates worldwide. And unlike other materials, silver has no substitute in high-efficiency solar cells. That means producers can't just pivot, they have to get their hands on silver no matter the cost. Add in the exponential growth of electric vehicles, which use far more silver per unit than combustion engines, and you have a perfect storm of industrial consumption layered on top of a monetary panic. The most alarming part? While demand is spiking, new supply isn't. Silver production has been flat or declining in key regions, and major miners are warning that grade depletion and underinvestment will keep output constrained for years. That leaves the Comex and other above-ground stores as the last, vulnerable layer of supply, and both are being drained at an accelerating pace. In past bull markets, industrial demand played second fiddle to investor flows. But this time, it's leading the charge. And as industrial users front-run the coming shortage, they're competing directly with investors for every available ounce. There's no buffer left. We're heading into a showdown between industrial necessity and monetary survival, and the market isn't ready.
It's so bullish because the insiders, this is how markets work. The insiders always lead the charge. The insiders don't just have the most money. It's not luck. The insiders are also connected to the information. And that's the most important thing. And if you understood the information and you see the people who understand the information moving in a certain direction, well, you should be doing that. I've talked at length over the last few weeks about the contrarian indicator. And let's just go over it once again for the chance that the few people watching this haven't heard me say this ad nauseum. And I apologize for those who have. But on one hand, you have the insiders dumping stocks, the hedge funds, the managed money has been selling between 2 and 4 billion a week since June. Buffett is sitting on between 4 and 500 billion in cash. You have a 7-to-1 selling to insider buying since the beginning of the year. You have the 3 or 4 largest board members of NVIDIA, huge stockholders selling cumulatively over $1 billion in NVIDIA shares. You have Bezos has sold over $6 billion in Amazon since June 1st. You get all of these insiders who have the information selling, right? At the same time, you have the public, which is all in the highest allocation to precious or to equities ever, more so than the great financial crisis and the dot-com bubble, about 54%. But if that wasn't bad enough, they have the largest allocation to margin play, the highest ever, over $1 trillion, and the largest allocation to options. So options and margin signal speculation and leverage. So you have the public all in on leverage and margin. At the same time, the insiders are leaving. But flip it over to the other side. You have the public, as you mentioned, very tepid in terms of their understanding or allocation to the commodities. But what do you have going on the other side? You have the largest deliveries on Comex that we've ever seen, ever. And the U.S. has become net importers. Who's bringing all of that gold in? And much of it leaving the exchanges. Well, those are the insiders who are closest to the information. So the insiders are buying commodities and selling equities, and the mom-pop public is nowhere near commodities and all in on equities. What could possibly go wrong? And this is what I think people should take away, is that, this is why the big money always wins. They're positioned when no one else has any inclination. And by the time the people figure it out, the insiders have been comfortably positioned for a long time, and they're probably at that point start looking for their next great value that no one else is noticing. And this is why the rich get richer and the poor get poorer, because the rich not only have the most money, they're closest to the information. They know the playbook. Do what they're doing, not what conventional wisdom is saying.
While the West hesitates, the East is already moving. In Shanghai, silver is trading at a consistent 6% premium over global spot prices. And that gap is only widening. This isn't just a quirk of regional pricing. It's a flashing red signal that physical silver is flowing eastward, out of Western vaults and into strong hands that have no intention of selling. Arbitrage traders are taking advantage of the premium by buying silver in New York and London, then shipping it to Asia for a profit. But here's the catch. Once that silver crosses the ocean, it's not coming back. China in particular has ramped up physical metal acquisitions, not just gold, but increasingly silver, as a hedge against dollar instability and as a strategic reserve for industrial use. Chinese solar firms, electronics manufacturers, and government-connected entities are vacuuming up silver at an unprecedented rate. The result? A steady pipeline that drains Western inventories and deepens the supply crunch. This quiet eastward migration of silver mirrors the gold exodus that's been happening for over a decade. And now, silver is following suit. And it's not just opportunistic buying. This flow represents a larger shift in global power. As Eastern economies prepare for a post-dollar world, they're stacking real assets while the West clings to digital abstractions. Comex and LBMA may still set the paper price, but the real market, the one that moves physical metal, is now being determined by the East. If the trend continues, Western investors could wake up to a world where silver availability vanishes overnight, with premiums surging and supply chains choking. And by the time that realization hits, the metal will already be gone, locked away in vaults half a world away.
People investing in gold, if 10% moved it to silver, it would consume all newly mined silver globally. This is, implying a potential massive squeeze. He said, 1 billionaire won't do it, but 10 would, or a 10% shift out of gold into silver. When you see governments like Saudi Arabia come into the fray, you know that it's coming. I found it very interesting. One of the things that I talk about a lot when we talk about the public not holding any gold, very little. My standard phrase I copy from Rick Rule. He says, from Joe and Jane Sixpack to the Harvard Endowment Fund, the average of gold owned by the public and gold-related equities is 1/2%. Well, lo and behold, the Harvard Endowment Fund just bought $101.5 million in GLD recently. And so now you have all of these institutions jumping into accumulating precious metals. Now, these institutions, I don't know how much they understand the difference between GLD and the real thing, but you look at Bass, his last name is Bass, I forgot, his Kyle Bass, I think is his name. When he was running the hedge fund, I think it was for the Texas the Texas Teachers Union, or it was a big fund for that. I believe that's what it was. It was a long time ago, maybe a decade ago, but he put all that money, like $1 billion into GLD, and they took possession of it as well. So I don't know if he intends to do this, or they intend to do this time, the Harvard Endowment Fund. But the very fact that they're buying $101.5 million in GLD tells you that gold and silver are becoming more mainstream, certainly more mainstream. And I think you'll see at this upper level on Comex, sovereign wealth funds, endowments, that's one step away from the public, who is still kind of blissfully, whistling Dixie, not really understanding the significance of this. But the people who are very, very tied in to what's happening globally are making moves and standing for delivery. It's a big deal. To see the Harvard Endowment Fund jump into this degree is a very big deal.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
But the pressure isn't just building in the vaults. It's spilling over into the premiums. As of September 2025, physical silver products are quietly creeping higher across the board. Silver Eagles are now selling for $4.50 above spot, up 10% from earlier this year. Even lower premium options like Australian kangaroos are at $2.79 over spot, and 10-ounce bars are inching toward $2. This might seem minor on the surface, but in reality, it's the canary in the coal mine. Rising premiums tell us one thing. Physical supply is tightening, and buyers are getting nervous. And it's not just retail investors causing this move. The U.S. Mint reported a 15% increase in Silver Eagle sales in Q3 alone, while the Perth Mint is running at capacity trying to keep up with global orders. Dealers are reporting longer wait times, especially for high-quality bullion. This isn't the kind of activity you see during normal market cycles. This is what happens when the public begins to lose trust in the system. People aren't just buying silver, they're competing for it. And every ounce that leaves the retail pipeline makes the squeeze on institutional supply even worse. What's more, this creeping rise in premiums is happening while the spot price remains suppressed, still hovering around $33.50. That disconnect between spot and physical is widening, and it's turning the silver market into a two-tiered system. One price for paper and a much higher one for actual metal. Eventually, that gap has to close, and it won't be the physical price that drops. Once the public truly grasps that Comex silver is being drained and that physical metal is getting harder to find, the fear of missing out will ignite a retail frenzy. And when that wave hits, the premiums we're seeing now will look like bargains.
Yeah, I mean, the deliveries on the Comex are extraordinary, Elijah, as are the offtakes off the Comex exchange, which are extraordinary. These are very, very much aberrations. They're anomalies. We don't see them very often, or never have until recently. And I remember talking with your dad in 2020 about all of a sudden all of these deliveries coming into Comex. They've only increased 100-fold. But when you talk about trends, Saudi Arabia is now, to my mind, the third government next to China and Russia who are, or maybe let's call it the fourth, India. India, China, Russia, and Saudi Arabia now. And again, these are all, these are members, whether admitted or not. Saudi Arabia is, in essence, in my mind, pretty darn close to a BRICS member in that they are a full participant in the M-Bridge technology. They are going to all of the BRICS meetings. They are very much have one foot in and one foot out to appease the West, but by all of their moves appear that they are going lockstep with the BRICS movement. They took a major stake in SLV, the silver ETF recently, and enough to demand physical delivery. Now, they haven't done it yet, but you have to have a certain amount, like it's a basket, huge amount, millions and millions and millions of dollars worth in order to be able to demand physical delivery. This is a privilege retail investors do not have. They will. I find it interesting. We've talked at length about China flying around the world and buying doré and concentrate directly from the miners in South America and Mexico. We've talked about India buying over 800 million ounces in the last 5 years. We've talked about Russia making it part of their national stockpile, which we'd never heard before from a government, and now Saudi Arabia is doing just that. And so when you realize that India, China, Saudi Arabia appear to be publicly accumulating silver under the guise of industrial uses, it's a lot more than industrial. Silver is really more strategic than it is industrial. You mentioned billionaires. David Bateman is the one that comes to mind. He came out recently and said, that just a 10% shift from gold to silver, where all the people...
As this plan unfolds, the numbers coming out of Comex tell a story the mainstream media refuses to touch. In just 8 months, registered silver inventories have plunged by over 30 million ounces, falling from 320 million in January to just 290 million by September 2025. And it's not slowing down. Each month brings new delivery records, with institutions lining up for physical, not paper. This isn't just high demand, it's a structural breakdown. The system is bleeding silver faster than it can be replaced, and analysts are finally starting to sound the alarm. If the trend continues, Comex could be facing a full-blown inventory crisis as early as the first quarter of 2026. And here's what makes that so dangerous. Comex was never designed to deliver this much metal. The futures market is supposed to be a price discovery mechanism, not a physical distribution hub. But when confidence breaks and holders demand delivery, the entire structure flips upside down. What used to be a paper game becomes a mad scramble for actual ounces. That's how you get supply squeezes. That's how you get skyrocketing premiums. That's how you get price spikes that seem impossible until they're suddenly real. It's already happening. July saw 10 million ounces delivered in a single month, driven not just by investors, but by industrial users in solar and electronics who can't afford to be caught empty-handed. The longer this goes on, the more fragile the system becomes. Inventories aren't just declining, they're vanishing. And with new supply unable to keep pace, the pressure is building. Once Comex hits critical levels, all it takes is one trigger, a shock event, a surge in buying, a geopolitical flashpoint, and the market could snap. At that point, the price isn't controlled by charts or analysts. It's controlled by panic, scarcity, and the realization that there simply isn't enough silver left to go around.
When we talk about Fed independence, it's really a lie. It's a farce because, you got Stephen Mirren, who is the author of the Mar-a-Lago Accord. He's taking over supposedly for the position that's vacated. And now there's another Fed board member who is being investigated for mortgage fraud or something along those lines. Trump is calling for him to step down. You're going to see more people put into the Fed that will do the tidings of the current administration. There really is no independence right there. But what it really signals, I think, to the rest of the world is that holding dollars is very silly, that if you hold dollars, you'll end up going broke. Because it's very clear, the Mar-a-Lago Accord and Stephen Mirren's plan is to devalue the dollar. I've been saying that on your dad's show for the last 2-3 months, that their whole plan is to devalue the dollar tremendously. And so whether you call it independence or not, the folks that are being put on the board who will make the decisions, I believe, will make the decisions in line with what the administration wants. There is no independence. But this is all part and parcel for why you're seeing de-dollarization. Holding your assets in dollars is the surest way to go broke in an inflationary environment. The dollar's already down 11% so far this year. And this is a trend that I think will continue not only just through de-dollarization, but also through the plans of this administration to have a weaker dollar with the intention of having it spur on manufacturing demand in this country, which is ultimately, I think, what they're saying they're trying to do. So, yes, in an odd sort of way, it will enhance de-dollarization. And even though it appears outwardly that there is independence, the folks that are being put on the board are anything but independent thinkers. They will toe the line with the current administration. So it's just smoke and mirrors.
And now we arrive at the most explosive part of this unfolding story. The claim that this isn't just market behavior, but part of a deliberate strategy by insiders at the highest levels of the financial system. According to a source tied directly to the Federal Reserve, there's a plan underway to eviscerate the US dollar. That's the word they used. Eviscerate. Not manage inflation, not restructure debt. Obliterate the purchasing power of the dollar as we know it. Why would they do this? To inflate away unpayable debts, to reset the system, and to shift the global monetary order. It's not a theory, it's a playbook, and the signs are everywhere. Since the start of 2024, we've seen endless liquidity injections, mounting fiscal deficits, and a refusal to tame inflation despite public posturing. The dollar is losing ground, not just to gold, but to real assets across the board. Even U.S. allies are beginning to back away from the dollar's dominance. BRICS nations are developing parallel systems. Foreign central banks are dumping treasuries, and gold purchases by governments are hitting all-time highs. But behind the curtain, the silver story is even more dangerous because it's smaller, more volatile, and far more explosive when capital floods in. If you were planning to quietly kill the dollar, you'd want a hard asset you could accumulate before the public wakes up. Silver fits that bill perfectly. This is why the mystery buyers' actions are so significant. They're not reacting, they're preparing. And if the plan really is to let the dollar collapse under the weight of its own manipulation, then silver won't just rise. It'll explode. It'll become a monetary life raft in a storm, engineered from the inside out.
I think that one of the things that I found very interesting coming out of that meeting, Elijah, is that Powell has more or less waved the white flag, if you will, against the battle, with the battle against inflation, and confirmed that they will no longer aim for their silly inflation target of 2%. Shift away from these dovish policies tied to I guess you could say, trying to pretend that inflation is under control. It's not under control, and I think really what they are looking forward to or trying to do is focus more on the labor numbers, which are ridiculous in and of themselves. When we saw, I don't know how many hundreds of thousands of jobs that were adjusted downward from May and June. And so in essence, it's a shift away from inflation expectations and now tying it directly to the labor market performance. I think what you can expect to see in that respect would be much higher inflation. And it's interesting that they're talking about lowering rates heading into what seems to be a very stagflationary environment where unemployment seems to be increasing. The numbers which we were told that represented strong labor numbers were a farce. And inflation really is far worse than what they are saying, as far as I'm concerned. You're talking, I don't know when the last time we've had a 2% monthly inflation number, and they'll never hit that target. So in essence, what you could expect would be much higher prices into a very weak economy. And, they talk about, this being a benefit for home prices as an example. Well, lowering rates isn't going to benefit new home buyers. It's only going to make the problem worse. That's what got us into this problem to begin with. So yeah, I think that the last thing really that this economy needs at this point, as far as I'm concerned, is lowering of interest rates, because it gets us right back into the same problem that we have been in all along, which is distortions of interest rates. The market should set the interest rate, not the bankers. And by allowing the bankers to do this, it's distorting asset prices.
So why would someone go through all the trouble of taking physical delivery when paper contracts are faster, cheaper, and more flexible? The answer is simple. Trust is evaporating. For decades, the silver market has operated under the illusion that paper claims were just as good as the real thing. But now, that illusion is cracking. More and more, investors are waking up to the fact that in a true crisis, promises don't count. Only possession does. And that's exactly why this mystery buyer is demanding the metal itself. No counterparty risk, no margin calls, no delays, just real silver in hand. And it's not just this one entity. There's a quiet revolution happening beneath the surface. Institutional players, hedge funds, even central banks are losing faith in paper instruments. They're shifting away from ETFs and futures into vault-stored metal and private allocations. Why? Because they've seen what happens when liquidity dries up and counterparties disappear. They saw it in 2008, and they're seeing it again now as geopolitical tensions rise, inflation rages, and fiat currencies wobble. The rise in physical delivery is a warning sign. It's telling us that big money is preparing for something, and that they're not waiting around for the system to catch up. Even more telling is how premiums are behaving. If the paper market truly reflected reality, there'd be no reason for Silver Eagles to trade at $4.50 over spot, or for bars to command escalating premiums month after month. But they are. Because in the real world, people don't want IOUs, they want metal. The walls are closing in on the paper-silver system, and the smart money is already walking out the door, holding something that can't be printed, paused, or manipulated.
As you're looking for that, another interesting thing that's happening is the reverse repo market, which we talked so much about a year ago, has dropped from $2.2 trillion to $28 billion. That's a 99% draining of bank liquidity. And in essence, there's no cash left in the system. And with debt exploding, something is about to break as far as I'm concerned. So the Fed will print again, and real stuff like gold, silver will soar. This is a big deal because the financial system is very low on cash. And so when big institutions used to keep their money there, over $2 trillion with the Fed for safekeeping, now there's only $28 billion left. That's like a giant emergency fund that's been drained. And as far as I'm concerned, the U.S. Treasury, which is now flooding the market with bonds to cover its record spending, all that debt sucks cash out of the system, and now there's not much left in the system. So you're going to get big players like hedge funds and other leverage investors who borrow too much, who are going to find it very difficult to find cash. And if they can't pay their bills, they'll start selling everything, which could crash part of the market. So I would say to you, yeah, this has never been more important ever to own hard assets right now. And this is another reason certainly worth talking.
Let's start with what we know. In August 2025, 1,720 silver contracts were delivered on Comex, equivalent to 8.6 million ounces of physical metal, worth nearly $300 million. That's not just a blip. It's a massive allocation of real silver, not paper contracts, being removed from the system. And the most chilling part? No one knows who the buyer is. This mystery entity isn't just nibbling at the edges of the market. They're swallowing it whole. And they don't seem to care about the price. Whether silver is at $30, $40, or $50, they keep taking delivery. According to Andy Schectman, once this silver leaves the vault, it's gone for good. It's not being leased, it's not being recycled. It's vanishing into private hands. Which begs the question, who has the power, the capital, and the urgency to pull off something like this? Some say it's central banks looking for a hard money hedge. Others suspect it could be sovereign wealth funds prepping for a global currency reset. There are even whispers of state actors, countries like China using proxies to build massive off-the-books stockpiles. But here's the kicker. This isn't just about accumulating silver. It's about removing it from the system. The very structure of Comex depends on silver being available for delivery. And when you start pulling millions of ounces out every month, you're not just stressing the market. You're destabilizing its foundation. So whether it's an institution, a government, or something else entirely, one thing is clear. Whoever this buyer is, they aren't playing the same game as the rest of the market. They're not here to trade silver. They're here to own it.
We're nowhere near the top because the public has no understanding of exactly what is happening. This has been driven by central banks primarily and big money and whoever is taking possession here in the United States. But the public is nowhere near even entered into this at all. So no, I think that, to see a market move the way that it has without the public involved is rather telling. To see, what amounts to north of $100 billion delivered into the Comex that we know of since the beginning of the year, what does that tell you? I mean, this has never happened before. And to see a lot of it leave the exchange, this has never happened before. And people at that level don't make moves like that unless they know something is coming. And I do believe that. I really do believe that. And so I guess I would say we're nowhere near the top. When you see, like, to your point, everybody talking about it, and everyone having allocation to it, well, it may be time to start thinking about this. But not only that, we're looking at lower interest rates coming, which of course benefit asset prices. And so this locks out average people as far as I'm concerned, because the average people, they don't own assets, and assets are what make the wealthy. Because, as they're going to choose a path of inflation, you're going to see everything pop up. You see stocks, real estate, bonds, gold, silver. All of these things are going to surge, in my opinion, at least at first. Now, what happens with the stock market ultimately is anyone's guess. To see all the people, all the big money moving out, to me, is very dangerous. But I think you will see cryptos, precious metals, those things are going to do very, very, very well. Hard assets in particular will do very well, because these are things that will protect you as your dollar is losing purchasing power. And, commodities right now are historically undervalued related to financial assets. So I would argue they're really the ones that are poised to break out. The system is under stress, Elijah, and it seems that to a degree reality is catching up. That's why the insiders are doing what they're doing. They do it long before the rest of us figure.
Something is happening behind the scenes that almost no one is talking about. Right now, a shadowy buyer is yanking millions of ounces of silver out of the Comex vaults. And they're not just speculating. They're demanding physical delivery. No rollover, no settlement, no return. this isn't normal. In fact, insiders are calling it the most aggressive drain on physical silver the market has ever seen. But what if I told you this isn't just about silver? Because at the same time this vault drain is unfolding, a Federal Reserve whistleblower claims there's a deliberate plan in motion to collapse the US dollar. Not by accident, but by design. And if that's true, then we're not just witnessing a market shift. We're watching the opening moves of a financial reset that could send silver past $1,000 an ounce. Comex is being bled dry, the dollar is being set up to fail, and the next move could catch the entire financial world flat-footed. So who's behind it? Why now? And what happens when the last ounce is gone? Stick around, because once we peel back the curtain, this story gets even crazier.